Today on Chart This, Gary's going to give us his take on Janet Yellen's speech yesterday, some key technical points, and more coming up. And with me now is Gary Wagner. Gary, thank you for joining me today.
Thank you. My pleasure as always.
All right, so Janet Yellen yesterday, gold spent most of the day moderately up and then dipped towards the end of the day in the afternoon. Now, off camera, you were saying this is something you were sort of expecting. Can you elaborate on that, please?
Well, you never know what to expect from the Fed, except we look at past meetings and how different governors or our new chairperson reacted. But I think that there was a confirmation that interest rates would remain low. And I believe that that's what we saw as a driving factor as we saw the equities markets at one point yesterday, they actually hit new highs, and gold also rallying at the same time.
Now, what kind of technical levels are you looking for? Last time we spoke, you mentioned 1329 was a key level. Now, that was obviously breached, but what do you see moving forward? What other levels are important that we should look for?
Well, I was looking at a potential top for the market somewhere around 1329. It certainly exceeded that, and I believe the intraday high so far this week was 1346. My number on top of that is between 1359 and 1365. That's one top, and then of course the mother of all tops that we really have to overcome if we're going to move back into a bullish mode is 1435. That's on the upside.
Now, getting into bullish mode, now the U.S. economy obviously hasn't been where people thought it would be so far this year, getting dovish tones from Fed Chair Yellen. Now, what do we look for to take us into the 1400, those 1435 levels that you've alluded to?
Well, my sense is that gold has been acting as the ultimate barometer really of market sentiment and uncertainty. As the stock market and the equities markets build, we have seen businesses generally increase production, but at the same time, when you look at the macroeconomics, we still have a ways to go. So I think it's that kind of fight that we have as we move out of the recession that we had. We're certainly not in that now, but we're not in a full-blown thriving economy yet. And as we kind of work that out, I think that could, in fact, be bullish for gold.
And Gary, what have you got for us today?
Well, the insert is going to be a short one this week, but it's really going to cover the levels that we talked about, meaning our upper level resistance points, as well as some of the support levels that we believe are important for investors and traders to watch.
Let's take a look at the inserts.
There's no doubt we have seen this market have quite a substantial rally since it hit that double bottom at 1181. On today's insert, what I want to talk about is one, really the power of trend analysis itself, our current Elliott wave model, as well as some target points or pivot points that I'm looking at in terms of where we think the price of gold is going to head over the next 2 to say 6 weeks. Now, what I've done is I've pulled up our daily chart, and on this daily chart, we've put in this really long-standing resistance line. And this resistance line I've talked about probably at least every insert or every other insert. And the fact was that as we made these series of tops, these descending tops, we saw this market characterized by a series of drops, dramatic drops at that, but most importantly, these dramatic drops appear at the beginning to find a resistance trend line that really needed to be overtaken before we could be bullish in any way. We talked about the fact that back in July of last year, this is really our only major rally that we had, and this rally was 1181 to about 1435. Market comes back down. I believe that it tests roughly the 1250, 1260 area. Second stab makes it up, and again, it does not have the ability really to break through this long-standing resistance line. And that is why, as this marketplace first formed that double bottom, and that was our first key that we could be looking at a potential where we were going to see a significant rally. As we formed that double bottom and the market began to move up, the point in which I said we should really look for some kind of major break in the market was this intersection. And it took a little bit more than a week because, as you recall, with this intersection itself, it did break above it and then kind of traded in it and around it for about a week to a week and a half. And of course, you can really see that when we go ahead and blow this chart up so that we can really make out these daily candles. We can see the failure, of course, in these two areas, and we can see the significant effort it took to actually break above that. But here's the key. If we take a look at the way that the market was trading, price spike, give much of it back. Price spike, pretty solid retracement in terms of percentage. Spike, again, pretty solid retracement. Spike, pretty solid retracement. So we were getting the market moving to higher ground, but doing it with significant and hard retracements all along the way. Now, once we actually broke above this long-standing resistance line, look at how that's changed. We've had this one almost parabolic but dynamic rally. If you recall, our initial target was roughly 1329. We've actually exceeded that. This is 46. So we did get that. And at the time of this recording, which is Thursday, we do have the market backing off of those highs. And you can see this right in here. This particular pattern right here is simply called a bearish harami, but it is a potential pivot point in the same way this dark cloud cover was, but we're not getting any kind of follow through yet. So what are we really looking at, and what do I believe this market will probably do? Well, it is still absolutely my belief that we do have the potential to see gold prices rise, I believe, as high as 1435, and that's this last top. There's two different areas that I feel above this particular price point are key levels to look at, as we talked about in the interview. This first one runs at roughly 1360 to 1365, and then of course we have a series of tops. 1373, that is a 76% retracement, and the retracement that I'm looking at is the entire retracement from 1435 down to, call it 1185, and this is the 76%, the 61%, and the 50%. Those are the ones that are worth noting right now. In terms of support in the market, I believe we've got some pretty strong support between 1302 and 1307. We have multiple harmonics that show up in this area in terms of Fibonacci retracement. And so I believe that that should be supportive. Below that, though, there is a point at about 1284, and that should be absolute dramatic support. That's a 38% retracement of this particular move. So on the upside, targets that I'm looking at, 1360 and 1373. In terms of support, I'm looking at 1309 and 1280, 1294. Those are the three areas that I'm looking at in terms of our different Fibonacci retracement levels. For those that want a little bit more information on this topic, want to dive a little bit deeper, as always, there will be some bonus content available on our website, thegoldforecast.com. So simply go to our website. You'll need to be a Chart This After the Show membership. Membership's absolutely free. Go ahead and click this link here, and that will take you to the sign-up page for the Gold Forecast After the Show. Again, Fibonacci retracement levels and how they currently apply to the price of gold in terms of support as well as resistance levels.
And thanks for coming on today, Gary. Much appreciated.
My pleasure as always. Always want to share what we can with the viewers of Chart This. Our hopes, of course, is it effectively lets them become more profitable traders as well as investors.
And thank you for watching this edition of Chart This with Gary Wagner. Remember, starting Sunday, March 2nd, we are going to be at the PDAC reporting on the conference. Make sure you tune in. Cheers.